Running a small business in the United States can be both rewarding and challenging. Every decision you make, every document you file, and every interaction with clients or vendors has the potential to impact your success. But there is one area that is often overlooked, yet can cost thousands of dollars if mishandled: your insurance claims. Many business owners assume that insurance is straightforward and that their claims will automatically be approved. Unfortunately, this is far from reality. Even a single small mistake, whether it is misunderstanding a policy term, missing a deadline, or providing incomplete information, can completely derail your claim, leaving you with financial losses that could have been easily prevented. In this video, we are going to explore 8 common insurance mistakes that U.S. small business owners make. We will also provide actionable steps and real-world examples to help you avoid these costly errors. By the end of this video, you will understand how to protect your business and ensure that your insurance works for you, not against you. Understanding your insurance policy is the foundation of a successful claim. There are several types of insurance every small business should be familiar with, including property insurance, liability insurance, and workers' compensation insurance. Each of these policies has its own set of rules, exclusions, and coverage limits. A common mistake is assuming that a policy covers everything. For instance, a business owner might think that property insurance covers flood damage, only to find out after a flood that flood coverage was excluded. Another example is misunderstanding policy limits, assuming coverage will replace all damages without realizing there are caps on payouts. Actionable steps: review your policy carefully, line by line. Consult a licensed insurance agent or broker to explain confusing terms. Make notes of key exclusions and coverage limits. Real-world example: a small retail store in California suffered a fire that destroyed inventory. The owner assumed that their property insurance covered all losses, but because they didn't understand the replacement cost versus actual cash value clause, they received significantly less than expected, resulting in thousands of dollars in out-of-pocket losses. Insurance companies are strict about deadlines. Failing to report an incident on time can result in claim denial, regardless of how valid the claim is. Many business owners believe that they can submit claims anytime, but policies often have specific time frames for reporting accidents, damages, or losses. Actionable steps: keep a claim checklist with all relevant deadlines. Report incidents immediately, don't wait. Set calendar alerts to track timelines for submitting documents. Real-world example: a small business in Texas suffered water damage. The owner delayed reporting the claim by 2 weeks, thinking it wouldn't matter. The insurer denied the claim, stating it was outside the reporting window. This mistake cost the business over $20,000 in damages. Another common error is submitting inaccurate or incomplete information. Insurance companies require complete documentation to process claims efficiently. Missing receipts, unclear photos, or inconsistent statements can lead to delays or outright denials. Actionable steps: document every incident immediately with photos, videos, and detailed notes. Keep organized records of invoices, contracts, and communications. Double-check forms for accuracy before submission. Real-world example: a restaurant in Florida submitted a claim for kitchen equipment theft. Some serial numbers were missing, and a receipt was not attached. The claim was delayed for weeks, and eventually part of it was denied. Accurate record keeping could have prevented this. Handling insurance claims alone can be risky. Professional guidance from insurance consultants, brokers, or attorneys can significantly improve your chances of a successful claim. Many small business owners assume they can manage claims themselves to save money, but this often leads to costly mistakes. Actionable steps: hire a professional when dealing with high-value or complex claims. Consult legal advisors for contractual or liability issues. Use professional claim adjusters if your policy allows it. Real-world example: a construction company in New York had a major equipment loss. They tried handling the claim independently and misfiled documents. When a consultant got involved, the claim was corrected and fully approved, saving the business over $35,000. Insurance policies are full of technical terms that can be confusing. Terms like actual cash value, replacement cost, and deductibles have specific meanings. Misunderstanding these can lead to unexpected out-of-pocket expenses. Actionable steps: highlight confusing terms and ask your agent for clarification. Understand what is covered versus excluded in your policy. Keep a glossary of terms for easy reference. Real-world example: a tech startup in Oregon assumed their equipment insurance covered replacement at full market price. The policy was based on actual cash value, which is depreciation adjusted. The misunderstanding cost them $15,000. Proper documentation is critical. Missing records, invoices, or contracts can lead to claim disputes. Digital organization is highly recommended. Actionable steps. Maintain a digital folder for all insurance-related documents. Backup records in the cloud or an external drive. Keep a chronological log of incidents and communications. Real-world example. A boutique in New Jersey had a theft incident. Without invoices for stolen items, the insurer refused reimbursement for several high-value goods. Keeping proper records could have prevented the denial. Many small business owners think insurance is a blanket solution. In reality, every policy has limits and exclusions. Assuming coverage without checking can result in expensive surprises. Actionable steps. Review exclusions carefully. Add riders or additional coverage where necessary. Regularly update your policy as your business grows. Real-world example. A photography studio assumed general liability insurance covered specialized equipment. After a fire destroyed expensive lighting gear, the insurer denied part of the claim. Every insurance provider has a claims process. Failing to follow the exact steps can cause delays or denials. Actionable steps. Read your insurer's claims guide thoroughly. Follow instructions step by step. Keep copies of every submission and communication. Real-world example. A logistics company in Illinois failed to provide a signed claim form required by the insurer. The claim was delayed for months and partially denied. In conclusion, avoiding these 8 mistakes can save your business thousands of dollars. Always understand your policy. Meet deadlines, provide accurate information, work with professionals, clarify confusing terms, maintain records, know coverage limits, and follow the claims process meticulously. By being proactive, you ensure that your insurance serves as a safety net rather than a source of stress or financial loss.